Ray Dalio once said that pain plus reflection equals progress. At first glance, it sounds like a quote about personal growth, but hidden inside those 6 words is the blueprint that helped build one of the most successful investment firms in history. The question isn't whether Ray Dalio experienced setbacks, it's why those setbacks ultimately made him wealthier, and the answer might completely change the way you think about investing. Ray Dalio didn't become one of the world's most respected investors because he could predict the future. In fact, some of his biggest mistakes came from believing he knew what would happen next. His real advantage was something much rarer. He built a system that accepted uncertainty instead of fighting it. That single shift in thinking became the foundation of Bridgewater Associates, now one of the largest hedge funds ever created. One of Dalio's greatest wins came from understanding that markets move in cycles. While many investors chased headlines and reacted emotionally, he studied history. He looked for patterns that repeated over decades, not days. This long-term perspective allowed him to recognize opportunities that others ignored. The lesson is simple but powerful. Wealth often belongs to those who can remain patient while everyone else is distracted by short-term noise. Imagine planting a tree. You don't dig it up every week to check if it's growing. Investing works much the same way. Another lesson from Dalio's success is the power of radical diversification. Many people believe confidence means putting everything into one great idea. Dalio believed the opposite. He knew that no one is right all the time. His famous all-weather strategy wasn't designed to predict the next market move. It was designed to survive almost any market environment. That's a profound shift in mindset. Instead of asking, how do I maximize returns, ask, how do I avoid catastrophic losses? Protecting your downside often gives your upside room to grow. Perhaps the most overlooked reason behind Dalio's biggest wins is his obsession with truth. At Bridgewater, employees are encouraged to challenge each other's ideas, regardless of rank. For many people, criticism feels personal. Dalio saw it as valuable data. Every disagreement became an opportunity to refine decisions. Investing isn't just about finding good opportunities, it's about eliminating bad thinking before it becomes expensive. This connects directly to investing psychology. Human beings naturally seek certainty. We hate admitting we're wrong. We chase winners because everyone else is buying, and we panic when prices fall because everyone else is selling. Dalio built systems specifically to counter these emotional biases. He relied on principles instead of impulses. That's a habit anyone can adopt, whether you're investing $100 or building a multi-million-dollar portfolio. One of his most remarkable successes during periods of economic uncertainty came from understanding the relationship between debt, interest rates, and economic cycles. While others focused only on stock prices, Dalio examined the bigger picture. He asked deeper questions. What forces are shaping the economy? Where are we in the cycle? That ability to zoom out allowed him to make better decisions when others were overwhelmed by daily market fluctuations. But perhaps Ray Dalio's greatest lesson has nothing to do with money at all. It's the willingness to learn continuously. Every mistake became a principle. Every setback became a system. Every success was documented so it could be repeated. That's why his philosophy has influenced not only investors, but entrepreneurs, leaders, and decision-makers around the world. The next time the market becomes unpredictable, remember this. The greatest investors aren't those who know exactly what's coming. They're the ones who prepare for multiple possibilities, stay emotionally disciplined, and keep learning when everyone else is reacting. Ray Dalio's biggest wins weren't built on perfect predictions. They were built on timeless principles. And in investing, principles have a way of outlasting trends.